Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back to the channel, sirs. Today we are looking at the quarterly time frame because there is an interesting candle formation developing here that could potentially lead to a longer sideways range. It does not have to happen, but I want to show you one example where we had a similar formation. It is this breaker here that is formed. Technically, it was not a clean break, so we do not really have some kind of gap here. However, it is still a level. I talked about this level in one of my older videos where price was coming down into support. Maybe some of you remember that. Back then, I said that if this level holds, we look for higher prices, and if we get a candle close below it, we look for lower prices. Well, once price lost that level, we did indeed see lower prices. However, the first full candle close below it will only come now in about 5 days. So first, I want to show you where we had a similar formation before, and that was on the monthly time frame last year. As you can see, we had this SR level here. Price first held it and then broke down. That is when this level turned into resistance. Back then, this was an area where I shorted once the long got invalidated. Then we saw a rejection, and price basically spent more time inside this range before making a move higher. If I now bring that idea over to the 3-month time frame, we can see that a candle is now closing below and the next one is about to open. So here are a few possible examples. The first one, which I would say is less likely but still possible in terms of candle behavior, is what price would need to do in order to remain bullish after that. Of course, we can get some other candle formations as well, and I am not trying to predict 9 months in advance, even though I am actually quite good at that if you look at my other videos. Yes, there were a few misses here and there. For example, on the yearly move, I mapped out this move, but the wick to the upside was not as high as I wanted. Mainly, I was looking for at least 112K. Anyway, the move down on the yearly did play out. So this is one possible formation we could get. First, the new candle opens and price simply pushes higher, breaks above this resistance. And then we basically range for another 3 months, retesting this level again, maybe even wicking lower or even losing the level briefly once more. But to remain bullish after such a move, we want to see this level break to the upside and then hold. A deeper retest would be fine, but the candle would need to close back above this area. Then, the next candle could be the one that pushes price higher. That is one possible scenario, and it would not look bad on the chart. It would leave some space here between the candles, so structurally it would actually look quite good. But unless the breakout happens, I cannot say for sure that price will break up in such a clean way. And that is where the other scenarios come into play. The other scenario is that yes, we do see a push higher, but overall price just stabilizes in this area, and we continue to range more or less. Price may move higher, yes, but still without a full breakout. In that case, we would need to wait for this candle to close and then see how price behaves afterward, because this small close opens the door either for higher prices or for more chop. For example, the next candle could still close red and only then move higher later, or it could move up right away. So if this candle forms, it will be a bit tricky. Still, a rise first would absolutely be possible. You can see why this one is more difficult. But as long as price is not breaking down, the next quarterly candle could look something like this. After that, we get an impulse move up into resistance, reclaim the first area, and then potentially stall around the second area, where we either see a reclaim or more chop. As I said, it's a bit difficult to say exactly what will happen 6 or 9 months in advance. But these are the scenarios based on the candle that is currently forming. And then we have the next example. In the last example here, you can see that price would be much choppier and more in decision mode. Yes, we could still get some nice moves, maybe even an SFP of the low, which is possible. But as you know from my last videos, I prefer to go step by step, and the first scenario would actually be that we do not get that SFP right away. Maybe we first get a rise and only later retest that level, similar to the monthly time frame example. Anyway, what matters here is that price could still have some good moves, and in the end, close like this with a smaller candle. That would clearly open the door again for another move higher, because this type of candle is often the turnaround candle where we see the bearish side getting exhausted, especially if that candle closes like this or even positive. And at that point, we would then have a 3-month candle SFP. And after that, I would look for higher prices. So now you've seen a few examples around this level. All of them can happen or none of them. What matters is that we are prepared for these outcomes. It could also mean a longer range, yes, with some solid moves inside it, maybe up into the 80s or near 90, and then back down, but still all happening below this bigger area here. That would simply mean more patience is needed for the real breakout, not just from the current local range wall, but from the broader structure overall. Unless, of course, we get the first scenario where price breaks impulsively above this area. That would be the fastest bullish scenario, although even that could later lead to some sideways action. I would be fine with all of these scenarios. As long as this area holds, even an SFP of the low would be fine. But if we start closing weekly candles below the last low, then we have to adjust and adapt the plan, because a close below that level can bring in volatility. And then, yes, we could see the other data points on the chart get hit. But as long as the signal remains active, I cannot really aim for those lower levels. I could only do that if this setup fails. Otherwise, I would basically be trading against my own statistics. So, with that said, yes, we could see a move soon, but whether that move ends up leading into a longer period of a bigger range still remains to be seen. Worst case, we could spend another full 3-month candle inside this area before getting a larger move outside of it, bullish to the upside or bearish to the downside. And with that said, let's now take a look at our local range and chart. So here we have our range. On the upside, we have the quarterly SR level we just looked at. On the higher time frame, it may not look like much, but if we look at it locally, it would be a move of around 8% from the last high to the lower part of that level. That is already a decent move, and depending on where it starts, it can become even bigger. If we take the mid-range, then it is about 25%, and from the range lows, like the SFP move, it would be around a 40% move. So it is clearly a very solid move, even if price just starts moving up from here first. But, as I said, if that happens and no real breakout follows, then we need to keep in mind that price can still come back down and range here for a longer period before moving higher. So my focus right now is to find a trade where I can take advantage of that move higher. And here, I still have the same plan as before. We have this time window where I want to see a resolution of this range, meaning a break. Of course, this range can always take longer. It can get shortened, and yes, it can also break down. But I cannot say right now that this range will take longer than expected, because for me, it is already a good range that looks ready to move. Still, just because it happened in the past does not mean it has to happen now. So I am ready if my idea fails and we see a longer sideways range. But based on my observation, I would prefer to see the move happen soon within this time window. For a trade, I would like to see a move down into this time area and hit a price level like the mid-range, or maybe even lower prices. We already talked about the low itself, that it has a high chance not to get touched, but if it does, then there is also a high chance that it forms an SFP, and only a low probability that it closes below. However, even for a close below, I am ready, because I am not ignoring the fact that it can happen. But by going with the higher probability events, I will first look for long trades at support areas, and only if they fail will I look for lower. So with that, basically nothing has changed. If those levels get hit, I will trade them and hold for potentially higher prices above this range. From there, we would then see what comes next, either a rejection and retest of this area, or sideways action and then a breakup. By the way, what I showed you before with the move above this level and then a sideways phase can also happen below this area. For example, price can push higher and then basically stop at this area below, not above, and spend some time moving sideways there. Maybe we get a wick down, maybe no retest at all, and price just hovers around that area, forming a range there before moving higher on the next leg. So there are a few scenarios, and it is difficult to say which one will happen. But what we can do is be ready and adjust to the situation. If this scenario happens, then I know I do this or that. If another one happens, then I do something else. But I need to know which scenarios are possible and which ones I actually want to work with, because maybe not all of them are scenarios where I want to be involved. Price could also just move up from here. That is a scenario where I would not have a long from this area. I would just hold my runners and then maybe look for a trade if price does not come back inside the range. So yes, that is possible, but it does not mean I would trade it from here. So with that said, the plan for now remains the same. I would like to hit the time area and price levels, whether it is the mid-range or lower. I will most likely try all of these levels on the way down to catch the bigger move. If it fails, so be it. If all of them fail, so be it. But that is a process I have repeated for a long time, so I know that over time there will be more winners. And in the worst case, I still hold some of the short I have and can then buy BTC even cheaper. But that is not my main scenario, based on the reasons I already explained a few times with the stats signal and many other signals flashing here. That does not mean we cannot move lower, but it means this is the area where I want to get involved, potentially for a longer period. What I buy here on spot, I might hold for many years. So for me, that is fine. But with leverage trades, I'm a bit more selective for now, especially since technically we are still in a downtrend. And that is basically it for this update and what I'm looking for on the higher time frame for the next moves. Now we wait for the new monthly candle to open, then we put our monthly statistical levels on the chart and go from there. Now for the local trades. I updated yesterday that I took profit on the long at 72K. It was slightly front run, so I closed it by market. And in the end, that was a nice decision because price basically just SFP'd that level and then moved lower. So the TP was on point. Because it was just an SFP, I also did not add to my short because it is the same area where I already had my short from. And for now, my short is a safe one, meaning I already took profits on it. So technically, as long as it is not stopped out, it is still an active setup with the target at the mid-range. I will only add to it if price moves above this level, clears that resistance, and then moves back inside. In that case, yes, we would have a new setup and I would add a bit more. Also, if price just moves above the level, I would still be protected because this trade is safe, even if I get stopped out. So the only logical reason to stay more or less protected from a loss is to do nothing right now unless I see a new setup. Then I would be ready to risk some of the money I already made. Until then, I just keep it as it is. The long runners remain intact as well, and the spot trades that I mentioned over time also remain the same. For example, the 5-day setup where I bought spot was not for long-term holding, and the target is at 95K. Or other setups, like here on the 12-hour time frame where I was buying on the way down. And other setups, even from higher prices, I bought them all. So overall, I have spot from setups, and I also bought some for longer-term holds, like from a cycle bottom to a cycle top trade. Now let's see what we have locally. We have a few levels today. First, the average loss area was already touched. We also have some lower time frame support here. So yes, that is local support, but for me, I'm not trading it, and I would still prefer lower levels. Now, if price bounces from here, then a few levels to watch on the way up are first the open range for today with the swing high there. We have a swing high there because we had a structure break. Not only that, we also had a daily and 12-hour SFP, and then a structure break here yesterday. From there, we got a lower high and a move lower, so locally, that is bearish 1-hour structure with the invalidation above. That means price can still make a lower high or even an SFP, but as long as it stays below, the structure remains bearish. A break above would then suggest we probably see a new high, and from there I would follow the plan, meaning I would look for weakness, maybe divergence, and weakness again because I want to add to the position. If none of that happens, I simply do nothing. So you can see that not all levels need to be traded, or even should be traded. They are all just a way to get to your action zone, where, for me, the better setups are waiting. That does not mean those levels are bad at all, just that they are not what I personally want to trade. With that said, for now, the last action was to take profit here. And now I am waiting either for lower prices for the next trades or for higher prices. I hope that was helpful. If you want to know more, you are welcome to join the Patreon, where you get some nice extras that can change the way you look at trading. I wish you a nice day, and I will see you in the next one.